Live stream, we have Powell coming in a couple of minutes over here. Guys, we have 15 minutes until the FOMC report comes out. I hope you guys are ready for that. This is going to be an absolutely massive day. Either way, what happens here is going to tell us a metric shitload about what is to come over the next couple of weeks and months with Fed policy. So I hope you guys are ready. And if you could do me a little bit of a favor over here, all you guys, just smack that like button on the stream. Just helps out getting these streams out to some more people, man. Help bring some more people in here because this is a really, really important event. I hope you guys are ready. This is going to be super fun. Yeah, let's get after it, man. The SPY's going to go fucking nuts. Probably. I don't expect this FOMC meeting to be a dud. It could be. I just really don't expect it to be. There's a lot of people that are going to be watching this event here, and it's going to get very interesting. So, team, make sure you slap the literal living shit out of the like button on the way in. Helps out a whole lot with the algos over here, and a little bit of housekeeping before we get into some of these charts. Remember, everybody has access to over 90% off their first month to the 1348 platform. The traffic lights are there. And if you guys are joining up today, you guys are just in time for 1, 3, and 5 minute speed racer, which is absolutely fucking nasty. So team, make sure you guys take advantage of the QR code right here. Use code Print City and you guys are going to be good to go. But if you don't know how to use a QR code, which fair enough if you don't, the direct link is pinned to the top of the live chat. So again, don't miss out, man. There are so many people out there leading retail investors to the slaughter. It's time that you guys start making money in the market. So here we go, team. What's Powell going over today? It's the rate decision. Dude, I am so pumped. This is going to be wild. This is going to be wild. All right, let me throw this link out on Twitter. Make sure everybody has access to this. All right. Live. Boom. Oops, that's the wrong link. That's the wrong link. All right, guys. What's a quarter code? What do you mean? What do you mean, what's a quarter code? What do you mean? What do you mean? All right, let's see what we're going to get here, team. Let's see. Purple Sky, what up, buddy? How you doing? Welcome, 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 everybody, to the live stream today. We have a really, really big day ahead. Hope you guys are ready. Hope you guys are ready, dude. This is going to be fun. Roll call up 2% on the port today. Let's see, guys. All right, let's do actually a little bit of roll call. How much, 1348 gang, how much are you guys up today so far? I know a lot of you guys have been fucking killing it. I love it, man. You got your SpaghettiOs and ready for Powell. Something about Susan says ready or afternoon all. There we go. You're out of Red Bull. 6% today says Moonbound. Oh, I hope you guys are pumped, man. This is going to be great. This is going to be great. We are going to have some fun. All right, I got to shoot this link over to Gabe real quick. Let's see. Ooh, I got to look at this really quickly. All right, cool. Oh my God, Diana's up 14%, 1.5. We got 0.5%. There you go, Tor. 15.6% on the port, up 4% today. Oh, you're talking about the rate hike. 3% on the port. Good shit, guys. All right, team. We have 11 minutes to go. Let's see. Phoenix, not telling, but it's a lot. Of course it is. Of course it is. All we do is fucking print around here, man. All we do is print. I love this, man. We are going to have a lot of fun, dude. We are going to have a lot of fun. And remember, for all of you guys that do want to upgrade to 3-year, make sure you guys reach out to Diana before the end of the day today to make sure that you are going to be there for the 6 p.m. midweek master stream that I'm going to be doing with you guys. Because, again, the prices are drastically increasing at the end of next week, end of the month. So make sure that you guys are securing that before then. And you get the thigh gap indicator, which I'm going to have up over here. SPY's trying to peek its head up a little bit. Let's see. SPY Journal, some people do. Some people do. It still works really well. But we just keep making everything better for you guys. Remember, 1348 is the core of what we teach you. Not everything. Waiting for Powell. Dude, it's going to be fun as shit. What do you think about having to put in a call for the SPY? I think you're gambling, but I mean, do what you want to do. I think it's a gamble. I mean, it's always going to be a gamble. No. Powell doesn't speak in 10 minutes. Your lifetime, do I need anything for the thigh gap indicator? Yeah, it's in master level updates. Do you think it'd be wise to go straight into the 3-year master sign or just start out with the trial? Rob, I would say for you, I mean, coming back in, I would say do the $5 for your first month and then come in. Once you start getting your feet under you, then you can upgrade to the 3-year if you want to. Again, the 3-year, I mean, those are going to be for the people that want those additional streams in the morning with Gabe. I mean, you can do whatever you want. You get those morning, the market open streams with Gabe. You get my midweek master classes. You get the Sunday master classes, the thigh gap. I mean, you do get a shitload with the 3-year. But again, if you're just starting to get your feet under you again, I mean, either option is great. Sorry, can't tell time. Yeah, he does speak at 2:30. All right, folks, we have 9 minutes to go. 9 minutes. Here we go, dude. Here we go. You want to see AMD drop? No offense to your long, but she's been taunting me all day. Dude, I'm not going to lie. I'm hunting for AMD to the downside too. I'm hunting for it. It's just been so strong recently that like it just didn't make any sense to go for it yet. But I do have some kind of fun shit ready to go. Loaded up here. I'm going to be hunting stuff once this report comes out. So we got 8 minutes. You want to turn your 3K port into $1 million in a year? High goals, but I think it's the way. Hey, the interview that's in the what do you call it? The second link in my description video is our interview with Jason, who turned $8,000 into over $1 million with us. So again, while I'll say it's not like a likely thing to do with those small dollar amounts, we've shown that it is possible. Gingy, I would say that if you're going to touch any options contracts while anybody is speaking or after 2 p.m., you're going to be taking on a very, very high degree of risk. So just keep that in mind. It's going to be very, very, very risky. And again, guys, as you guys are filtering in, if you wouldn't mind doing me a favor here, hitting that like button on the way in, helps out a whole lot. Spreading these streams out helps with the YouTube algorithms, getting these streams out to more people because we have a massive Fed meeting today. This is the biggest one of the year. Biggest one of the year so far. Yeah, we're 12 likes away from 100 too. Thank you, guys. That's awesome. You have 100K that you could put into your report. I wouldn't recommend doing that. I mean, again, you can do whatever you want at the end of the day. I would say get consistency for like 6 months and then start adding a bunch of money in. Because again, I still think you need to, because I don't want you running into the same problems that you were in previously where you're holding too long, you're trying to hit big gains. I want you to have confidence in yourself to manage that large amount of money. Then the only way to do that is to be able to manage a smaller amount of money. Does that make sense? Cootie. Oh, Cootie, I fucking love you, bro. The energy that Cootie brings is awesome. When does Powell speak? Guys, I thought we were done with asking when Powell was speaking. I thought we were done with this. Ooh. Oh yeah, Kenny, how's the port going, buddy? All right, guys, keep smacking that like on the way in. This is going to be great. Oh. Hello. I can't hear you. I still can't hear
you. What's up?
Now I can hear you. What up, buddy? How you doing?
I'm eating my protein, waiting for Paul.
What is it? Is that beef jerky or Cracker Jacks? I can't see.
No, sweet teriyaki beef jerky, man.
Nice. Those are good.
They're yummy.
Those are good. Dude, Sweet Baby Ray's is the best. Sweet Baby Ray's the best. Barbecue sauce, fire.
I will say this to you, man. I don't know how you sit on a chair all fucking day without your back hurting.
It does. That's probably why I had that pulled muscle and I needed to go to the playground to get it fixed. I'm also pretty sore, so like I might just have to go to the playground and like have a little fun so that I don't have any other issues. Solves all your problems.
Yeah.
At night, no. They wouldn't dare come over here with that nonsense. Ugh. Let's see. If you had to guess, where do you think the markets are going? I don't have a guess. That's the thing. It depends on what this rate hike is. So it's running up. We have 4 minutes to go, team. Collecting more pearls. Yeah. It's kind of how we do things, man. You know? I got jackets. I got pearl necklaces. I got all that shit, dude. Spy region. Hello. I have like two. Whoa, hello. Oh, this fucker. I wanted this. There were a couple things that I was looking at. I have them on both my screens here. Oh, wait, do I? Yeah, I got both of them. Oh, this is actually setting up really good now. Oh, this is interesting. I like this.
I like the setup.
Yeah, because I'm hunting some fun things. And I'm like, Oh, one of the Ritas is up 4.6.
Love it.
Yeah, but the other one was up I think 7 today and it stopped.
We prove it out for science.
Again, I'll throw this QR code quickly up on the screen for you guys. Everybody gets over 90% off their first month to the Trade 1348 platform. If you guys want to keep getting led to slaughter by the morons, don't scan the QR code. If you want to come in and actually make some money in the market, get the QR code. The link is at the top of the live chat. I'll throw it in here for you guys too. Just use code Print City, and you guys are welcome to Print City. So there you guys go. QR code's going off the screen. Yeah, it's $5 for your first month, guys. It's the deal of a century. 3 minutes. Three minutes. I'm pumped. Pulling the spring back. It's just flickering, dude. This is gonna do some bullshit up until 2. So you got these two more candles here. You're coming down to that 1 minute 200. People are nuts not to take that offer. They are, man. We can't save everybody over here. We can save a bunch of you guys, but we can't save everybody. You have to prove that you're willing to be saved. 3 minutes till what? The report. Powell's at 2:30, but the numbers come out in 2 minutes. Purple Sky has been saved. There you go, buddy. Locked and loaded. There you go, DM. Spy would be sitting on the coin. What's up with coin? Is it moving? It's aggressive.
AMD has been relentless. Oh my god.
I love her. Dude, I have a giant AMD position now. Well, for me. All right. 45 seconds. Upgraded to 3-year today. LFG, all function, no style. Welcome, buddy. Again, reach out to Diana before the end of next week, before the 3-year price goes up. And you get access to Gabe's pre-market streams, my Wednesday masterclasses that we're doing tonight. Get ready, team. Get ready. And the thigh gap indicator that everybody's been printing with. All right. 20 seconds. Dude, Gabe, I'm excited for this. I'm ready to go.
I'm definitely excited for this. Oh, man.
I hope you guys are too. All right, guys, keep smacking that like button on the way in. Let's do it. It's happening. We all know it's 0.25. Well, I mean, it could be. It could be 0. It could be 0.5. This is where Powell decides that if
1
he wants to
minute.
be Volcker or not.
Get on the 1 minute
No. Here
chart.
it is. Here it is.
Get on the 1 minute chart.
I'm on it right now. All right. Let's see what the news feed has to say. 25. We got our 25. There she goes.
I'm
There
gunning
she
for it.
goes.
I'm gunning for it. I'm gunning for
There's
it.
the move.
Come on, come on, come on, come on, come on.
There's the move.
There you go. That's all I needed. That is all I needed. Done.
Whoa! Look at this fuck you candle right here, team.
STV.
Yeah.
Remember, I was up, what was it, 14% on the day?
Yeah, what are you up now?
I don't know if you guys can see that there, right?
What is it? I
26.
26% on the day? Oh, you're full screen now. On the port. Guys, traffic lights are the truth. Don't get left behind. Here you go, right here. Bing!
26% on port. Gotta love it.
Let's see. What is everything else doing? SPY fucking around, coming right back down. Let's see what this wants to do. Rivian spicy.
This should be fun.
This will be fun. I'm trying to. Where's the. There it is. Trying to think of what I want to do here. Let's see. All right. So now they are pausing. No, they're not. They did a 25 basis point rate hike. This 25 should indicate 2% negative impact on the market. Why? Oh, is that what do you call it? Is that what the banks were pricing it? You just sold at the peak. There you go, bud. Yeah, these aren't moving. Why is okay? I don't like it. Yeah, bank survey. Yeah. So right now it's a dud. I mean, you got this wild fuck you candle of like what, $1.83. Now it's coming back down. So now it's really based on what Powell has to say.
Gotta love the algos. Thank you.
Where's coin? Oh, that thing's been moving. Wow, they're not being very nice with this. Come on. That's the best you. Ooh, they gave me that. Let's see. AMD or NVIDIA look like the best downside opportunity when the charts agree. I agree. Hold on. Fed swaps show peak rate of 4.96 for May. Little change. So everything priced in. Euro rises up against the dollar after the Fed rate decision. 2-year treasury yield down 17.5 basis points. NASDAQ 100 gains 20% from December low. FOMC statement, some additional rate increases may be appropriate. Fed median forecast shows rates at 5.1 at the end of 23. 4.3 at the end of 24. This is ripping now. This is going now. Let's see. Nancy pumping? Is AMD pumping too? Where's AMD? Hold on. Oh, AMD just broke 100. There we go, bro. There we go. I love that. Holy thigh gap. Yeah, dude. What do you guys expect at this point? It's fucking nasty. SPY 401. Bob again, a little jumpy. Let's see. Tesla's trying for 200 again. Oh, Tesla with a move there. Here we go. Oh, dude. AMD, I love you. That's big money there. Up $4 on the day. Where's the long term at? I don't think they're going to let me refresh the data, but I bet it's going to be beautiful. Refresh market data. Fuck you.
STB, I just did a thing.
Oh, no. What'd you do?
Port's up now 38%.
Jesus. You're a fucking monster.
Okay.
You are a monster.
I'm also a client. I'm a client of my own fucking strategy. Come on. Let's go.
Oh, yeah. It's simple, dude. Like, you just see these happen all the time. You'd have to be a real dum-dum to not come in for that offer that we're giving you guys. Let's see.
I made 140,000 this week, STB.
This week?
Yeah.
You fucking animal.
Yeah.
I hope you guys heard that right. Gabe made 140 grand this week. Yeah. The long term's up like 1,900 today. That's not bad. Let's see. SPY, what do you want to do? And it's only Wednesday. Yeah, dude. It's only Wednesday.
No, I think I'm going to be done.
You might as well. You might as well. Guys, if you want to come in there with us, it's literally $5 for your first month. Here you guys go. The motivation is everywhere. And again, the proof is in the pudding. We show you guys this stuff every single day.
Every day.
Every day, man. We don't go anywhere. We just show you guys the proof is in the pudding.
Yeah.
I mean, if they hold this at 400 and let this fly, Powell's like press conference today could be wild. It's possible that it ends up coming back down off of the bank statements. But other than that, I mean, this thing off of the 25 basis point rate increase and then what like basically the Fed came out with in the statement, I don't see that as being too bearish for anything. Let's just see what happens here. 11.39% on the port for the day. Attaboy, Marky Mark. All right, guys, keep smacking that like button on the way in. I see all you slackers over here. Jesus. Powell's going to tank the market. I don't know about that. We'll see. Oh, I might do some wizard shit. I might do some wizard shit. Let's see.
I just don't see the market tanking. We don't. We got another bouncy. What do I do? What shall I do?
Let's see. How does this, hold on, how does this look here? I'm very interested for this. This is going to be fun.
I'm waiting for another setup. I think I can do a 50% day STV. I think.
Oh, I think you can too. I'm hunting something here that could do some dirty shit. So it's fun. It's a tiny trade, but well, that's going to help. Let's see. Where's this? Baba hanging out up there.
I'm going to mute myself while I enjoy my snacks.
It always does the opposite of what we think it's going to do. That's not true. Let's see. We got 20 minutes until Powell, guys. So he's going to be coming on in about 20 minutes here. So let's see what it wants to do. You got that move up. It's slow. If it breaks this 1:13 here, that could be a little bit icky. Let's see. On the 3-minute, what's this thing doing? Just kind of stuttering. Teetering 400 here. Let's see. It's just bouncing off 400. There's got to be some buyers sitting there. Let's see. You bet big old J Powell tanks it? Who knows, man? Who knows? Yeah. This is gonna be fun. This is gonna be fun. What are you doing over there?
I was enjoying my snacks.
we got Prince City. We have snacks in Prince City, team. Don't you worry. Let's see. All right. Be careful for the rug pull. That's kind of what I'm hunting here too. Like, I don't know if this is like, yeah, above 400 is interesting. And Powell comes on, they could pump this thing right back up.
Dimlitzen. Who said I was bullish? I'm not bullish.
Guys, I think you guys, Dimlitzen, especially you got to realize this. We are never bullish or bearish. We follow the traffic lights. That's why we're able to have so much success, because we just follow the system. We don't have a bias. SB, what time is the masterclass stream later? Oh, for the lifetime in 3 years? 6 p.m. 6 p.m.
Eli wants to make it. No, if I make 100K a week, no, I don't. Right. My goal. Okay, so market gives me more than I deserve. Cool. My goal is about 25 to 30,000 a week.
Oh, I've seen you do some dirty shit.
Oh, I've done ridiculously dirty shit, but I have a goal.
Some wild shit.
I trade for bare minimum, and I appreciate every additional opportunity the market gives me. Right. So,
little knifey knife there. All right. Gabe, I did some wizard shit for fun, and we're going to see how it goes.
Let's do it.
I just want to see how these move. I just sold something at like, what, 30%?
Okay.
I just want to see how these move. If you hold on. This is what it is. But they're wild, bro. They're wild. Like, these aren't gonna hit, but I can scalp them.
All right, STV, you want to know a little secret?
Is that what you did too?
That's what I've been doing this week.
Was it 0 days on them?
Yes.
Yeah, I'm telling you, dude, they're kind of nuts.
We talked about it last week.
I told you you would like those, and all that money you just made is all tax advantage.
Yeah, it's all tax advantage. Remember, we were talking about it last week.
Mm-hmm.
I was driving to the beach last week, and yeah, we were talking about it, and I was like, oh, okay, yeah, let me do this instead. Let me see how it works.
Yeah.
Yeah. The gains have been ridiculous.
Yeah, I know. I might start messing with it more too. I'm just doing it on a day like today just for fun. Because the ones that I have right now are literal gambles. But if they go, they go. But I've already scaled out of them too. So it's like,
DMI. I was like, come on, Rick and Rose. They're letting the cat out the bag.
Hold on. What are they saying? The Tesla. Oh, yeah, that's what it is. Yeah, we're trading SPX.
Yeah, we can't tell you what we're doing, but if you guess it, I'm not going to lie to you.
Right. Yeah, we've been fucking around a little bit with SPX for fun.
And that's the reason why I've been having like just ridiculously outsized gains, like because of that.
It's fun. It is very fun.
It is. It is very fun.
Let's see. Let me grab the Powell link so we have it. Jerome Powell. Where's the Fed? I actually have to go on the Fed, fucking Federal Reserve. Yeah, so guys, we have 14 minutes until Powell's coming on. Yeah, all right. We got the stream up over here. Perfect. Which SPX? There is no which SPX. It'll show up on your thing as like XPXU or something like that. Like the ones that I have right now will show up as like, if I do it, it'll say, or XPXW. That's what it shows up as. See, I just kind of want to see if these do what I think they can and see if I can snag one on it.
Oh, you're going to get it.
Oh no, this one's just for fun. This is not like a serious trade. Like, that's why I was so quick in and out at like 30%. I was like, give me that. Let's get this shit out of my account. How do you get to the chain on Webull? Oh, yeah. I forget how to do it. You have to like ask them to let you do it because you're trading index options. It's slightly different. It's like not really, but like there's some other things you got to be aware of with it. So you have to ask them to approve you for index options, which usually takes like 2 seconds if you're already approved for options. Tyler, you're not trading SPX. Stop. Don't do that.
Tyler?
I forgot that was Tyler. Tyler, you're not trading it. No. Forget what I just said. That's not how you do it.
No, don't do it. Oh my God, Tyler. Listen, if you don't have at least 100 grand in your account, right, and you're still living with your parents, you have no business trading SPX.
Don't do it. It's very risky. The at the monies, I don't even know what the at the monies are at right now because I didn't buy at the money because I'm having fun. But let me look. What are the at the monies on SPX right now? They're probably ridiculous. The at the money puts are 2,100 a pop. Oh, I like it. I might fuck around with this more. You're just curious how much they cost it? Oh, yeah, they're expensive. Let's see. All right. 12 minutes until Papa Powell comes on.
Yeah, Spy's gonna run one more time.
He's gonna come out and say, "Good afternoon." It's the first words out of his mouth. You traded NDX today? Nice. Spy's trying to get back up to 400. Let's see. SPX at 4. This is funny. There is an option chain. It's just you have to be like approved to be able to even see it at this point. You paper traded it? Nice. Back above 400 here. Let's see.
What did I say? It's gonna go back up. Didn't I say that like 30 seconds ago?
I didn't hear that one. I was too busy focusing on this one. I think yeah, the overall move here is interesting. It's just going to be very dependent upon like what Powell says. If he says anything weird, remember the last time that Powell was about to speak, he didn't say anything yet, and the market just nosedived. We can trade SPX on that broker. No, I don't think we should do that. Oh, that's why.
Not with a bot.
No, the reason being is because Gabe and I were talking about this. If you do it the way that we should do it, there's technically no difference and you just have less contracts.
Yeah.
are tax advantage because it's indexed. Well, it's treated like futures. So 60% of the gains are taxed at, I believe, I'm like 99% sure that 60% of the gains on index options are taxed at long-term capital gains. You don't see much upside to the chips. The reversal is going to be killer. The RSI is cooking on the daily. Yeah, Moto, you almost have to be a little bit late on the move, though, because they've been so strong recently, like NVIDIA and AMD, that yes, they should come back down. Like, I'm not sitting here with my long-term position and being like, woohoo, let's double it and go to 100 or 200. No. I think they are going to be coming down. But at the same time, the strength that they have shown, if the market shows any signs of bullishness, those things are going to go boom.
Oops, sorry.
Are you finger popping over there? Was that what I think it was, Gabe? I wasn't watching you over here. What?
I'm finger popping your father.
Dude, those fucking I swear, when I said that to people on the football field, they would lose their minds.
Oh man.
It was so funny to watch people just lose it. All right, guys. I still see you slacking on the like button. Keep hitting that like button on the way in. The 5-day out at the money contracts are 3,600 to 4,000. Yeah, dude, they're crazy. The SPX contracts are ridiculous. They're fun though. They also move in 5 cent increments, so you don't get like the 0.01 moves. So that's good or bad. Depends on how you want to look at it. It'd be hilarious if we ended back down on like 395. Just fuck it up to 402 and then just rip it right back down. What position did I play in football? I was outside linebacker. So and I also played safety too.
You were a big fucking safety.
Because I was tall. I just like jump. Just be like, that's mine.
Let's see. Just paper trade SPX for the hell of it.
Yeah, paper traded. Don't fucking actually do it. Oh, that's fine. I was just thinking about something.
Algo was nose guard and tackle. Jesus Christ.
Big boy.
That was the water boy.
Let's see. I was also captain of the golf team, I'll have you know.
Wow.
Yep. Oh, 7 minutes. Come on. I want to hear Jerome. I want to hear Papa Powell's voice. I want to hear it. You played center? Yeah, you're a big boy, though. See another rip for the spy? I don't care. It depends on what Powell says. Chess club, too? No, I was never. There was no chess club, I don't think, at my school. Spy teetering.
Okay, Ralph, I like that one. Captain of the Swingers team.
I know you were, Wreck-It Ralph. Let's see. Oh, Pepe, I feel like you're in here. Do you see my quote tweet of what I said to you? Pepe was up 16% on the day, and I just quote tweeted it and said, I love scamming you guys. Bad man STV strikes again. Dude, I love when people come in here and just say nonsense that we get to have fun on Twitter with them.
All right, 5.5 minutes.
Let's do it. Ooh. I still got coffee left. Damn scammers. Yeah, sorry. Pepe, sorry for scamming you up to 16% on your account today. Yep.
I'm going to do shots with Pepe every single time he says tools.
Jesus, you're going to be hammered by the end. You're going to be fucking hammered. You're going to be more hammered than we were when we fucking had a great time in Boston.
Oh, no. That's impossible.
Guys, Gabe and I have to space out the times that we meet up like aggressively because we have to like recover for like a couple of months.
Yeah.
I don't think
you're not the kind of guy I want to hang out with every weekend, bro. Like, no fucking way.
I don't do that every weekend, but when you show up, it was your fault too. You can't blame me for this. It started with you. You're the one that just started at dinner being like, 2 shots for the both of us. And I was like, fuck, I know how this is going to go.
Yeah. Yeah.
It was fun, though. I had an amazing time.
Yeah. Man, I'm thinking about church today. I got to pay my 10%.
Yeah, you should go. Wow, that's going to be an aggressive night at church. Jesus. Let's see.
Is this the bottom? Oh my God, really? Somebody go, man.
Okay, Eli. No. Stop that. You're going to get us canceled. Oh, here we go. How much time we got left? 4 minutes, guys. Here we go. I take a shot every time you hear a trade alert in the background of J Powell's speech. Dude, those are fun. Have I come to Orlando? Yes, I have, and would love to do some shots with you guys. Rob, that would be fun as fuck. I've been to Orlando a few times.
Yeah, that's why I muted the alerts. I'm not taking a shot.
No, I think he's talking about like you can hear the TD Ameritrade dings go off in the press conference. Which is hilarious when it happens. Somebody should make a video compilation of all of the dinging of like the TD Ameritrade or whatever brokers there are. Because you can hear them sometimes in the background of the Fed speeches.
Oh. Okay. I'm waiting for it.
You guys are going to end up buying the church at this rate? That's fine. I want to buy the playground. The playground's a great place.
No, it really is. It really is.
You liked the playground, didn't you?
See, I like the DJ at the playground.
Yeah, the DJ at the playground was good.
A lot of you kids were just way too fucking young, but I was saying to myself, how do you guys know these fucking throwbacks? Because the DJ was strictly like late 90s, early 2000s.
Yeah. Wait, did I? Hold on. I'm trying to think of. No, I'm mixing up the nights. I thought because there's the famous person that we hang out with sometimes, and I was like, did they come that night? And no, I don't think they did. Oh, maybe they did. I think they did. I'm pretty sure that. I don't know. That whole weekend's a blur. Wasn't as bad as the Halloween bar crawl, though. That was. I had to rethink my life decisions after that one.
Oh, Jesus.
Let's see. That's what I mostly play at Arius. Kids don't have good new music. Yeah, true.
Yeah.
Invite Jerome and Pelosi to the playground. Yeah.
Yeah. I think Boston was the most I ever got hammered with you. Like I normally don't do that. I'm too old for that. But
because we knew that we were just walking everywhere or Ubered, so we were like, "Fuck it."
Yeah, that's what it was. It was like no responsibilities.
Yeah, we didn't have to do any. We had no responsibilities. We just said YOLO. The problem is that the funniest thing is when I tried to win the battle versus the tequila when you weren't there.
Oh no,
that didn't go well. Then I ended up at the playground and I was like, that's not good. All right, we got 1 minute to go here. All right, guys, let's get this ready to go. Powell's coming on soon. Keep hitting that like button on the way in. And remember, guys, I'll throw this QR code up here too. Remember, everybody gets access to $5 for your first month. It's not $5 off. $5 for your first month on the platform. Gabe made what was it, 140 grand this week?
Yeah.
It's fucking insane. So if you guys do want to hop in there with us, learn the actual skills, how to print money in the market every single day. There you guys go right there. And for those of you guys, remember, next week is the last week to upgrade to 3-year before the price drastically increases. So if you guys do want all the additional value that we have in there for you guys, make sure you guys reach out to Diana and she will help you out. But let's see what Powell has to say. Dude, they're like, this is weird. Yeah, Gabe, just make sure you're muted too, so it doesn't like reverberate.
Okay, yeah, that's
38,000.
fine. That's
Yeah.
fine. By the way.
38,000 people watching Powell right now. What's the playground? Don't worry about it.
All right, I'll mute myself.
If I want to scam you out of some get veto, I'm down for that. All right, let's see. Do I have this? They're playing music right. Oh, here it comes.
Fuck it, I'll do it myself. Jules.
Stop. Oh.
No audio, brother.
Hello. That's weird. Hold on.
Jules.
Created the Bank Term Funding Program to ensure that banks that hold safe and liquid assets can, if needed, borrow reserves against those assets at par. This program, along with our long-standing discount window, is effectively meeting the unusual funding needs that some banks have faced and makes clear that ample liquidity in the system is available. Our banking system is sound and resilient with strong capital and liquidity. We will continue to closely monitor conditions in the banking system and are prepared to use all of our tools as needed to keep it safe and sound. In addition, we are committed to learning the lessons from this episode and to work to prevent events like this from happening again. Turning to the broader economy and monetary policy, inflation remains too high and the labor market continues to be very tight. Colleagues and I understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. The U.S. economy slowed significantly last year, with real GDP rising at a below-trend pace of 0.9%. Consumer spending appears to have picked up this quarter, although some of that strength may reflect the effects of swings in the weather across the turn of the year. In contrast, activity in the housing sector remains weak, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Committee participants generally expect subdued growth to continue. As shown in our summary of economic projections, the median projection for real GDP growth stands at just 0.4% this year and 1.2% next year, well below the median estimate of the longer run normal growth rate. And nearly all participants see the risks to GDP growth as weighted to the downside. Yet the labor market remains extremely tight. Job gains have picked up in recent months, with employment rising by an average of 351,000 jobs per month over the last 3 months. The unemployment rate remained low in February at 3.6%. The labor force participation rate has edged up in recent months, and wage growth has shown some signs of easing. However, with job vacancies still very high, labor demand substantially exceeds the supply of available workers. FOMC participants expect supply and demand conditions in the labor market to come into better balance over time, easing upward pressures on wages and prices. The median unemployment rate projection in the SEP rises to 4.5% at the end of this year and 4.6% at the end of next year. Inflation remains well above our longer run goal of 2%. Over the 12 months ending in January, total PCE prices rose 5.4%, excluding the volatile food and energy categories. Core PCE excluding those, core PCE prices rose 4.7%. In February, the 12-month change in the CPI came in at 6%, and the change in the core CPI was 5.5%. Inflation has moderated somewhat since the middle of last year, but the strength of these recent readings indicates that inflation pressures continue to run high. The median projection in the SEP for total PCE inflation is 3.3% for this year, 2.5% next year, and 2.1% in 2025. The process of getting inflation back down to 2% has a long way to go and is likely to be bumpy. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by a quarter percentage point, bringing the target range to 4.75% to 5%. And we are continuing the process of significantly reducing our securities holdings. Since our previous FOMC meeting, economic indicators have generally come in stronger than expected, demonstrating greater momentum in economic activity and inflation. We believe, however, that events in the banking system over the past 2 weeks are likely to result in tighter credit conditions for households and businesses, which would in turn affect economic outcomes. It is too soon to determine the extent of these effects, and therefore too soon to tell how monetary policy should respond. As a result, we no longer state that we anticipate that ongoing rate increases will be appropriate to quell inflation. Instead, we now anticipate that some additional policy firming may be appropriate. We will closely monitor incoming data and carefully assess the actual and expected effects of tighter credit conditions on economic activity, the labor market, and inflation. And our policy decisions will reflect that assessment. In our SEP, each FOMC participant wrote down an appropriate path for the federal funds rate based on what that participant judges to be the most likely scenario going forward. If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 5.1% at the end of this year, 4.3% at the end of 2024, and 3.1% at the end of 2025. These are little changed from our December projections, reflecting offsetting factors. These projections are not a committee decision or plan. If the economy does not evolve as projected, the path for policy will adjust as appropriate to foster our maximum employment and price stability goals. We will continue to make our decisions meeting by meeting based on the totality of the incoming data and their implications for the outlook for economic activity and inflation. We remain committed to bringing inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening in labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
You, Colby Smith with the Financial Times. How confident is the committee that the recent stress that we've seen and you've alluded to is contained at this point, and that deposit flight among mid-sized lenders in particular has ceased?
Thanks. So I guess our view is that the banking system is sound and it's resilient. It's got strong capital and liquidity. We took powerful actions with Treasury and the FDIC, which demonstrate that all depositors' savings are safe and that the banking system is safe. Deposit flows in the banking system have stabilized over the last week. And the last thing I'll say is that we're undertaking a thorough internal review that will identify where we can strengthen supervision and regulation.
Just a quick follow-up. I mean, given all of the stress and the uncertainty that you've also alluded to in the statement, how seriously was a pause considered for this meeting?
So we did consider that in the days running up to the meeting, and you see the decision that we made, which I'll say a couple things about. First, it was supported by a very strong consensus, and I'll be happy to explain why. And really it is that the intermeeting data on inflation and the labor market came in stronger than expected. And really before the recent events, we were clearly on track to continue with ongoing rate hikes. In fact, as of a couple of weeks ago, it looked like we'd need to raise rates over the course of the year, more than we'd expected at the time of the SCP in December, the time of the December meeting. We are committed to restoring price stability, and all of the evidence says that the public has confidence that we will do so, that we'll bring inflation down to 2% over time. It is important that we sustain that confidence with our actions as well as our words. So we also assess, as I mentioned, that the events of the last 2 weeks are likely to result in some tightening of credit conditions for households and businesses, and thereby weigh on demand, on the labor market, and on inflation. Such a tightening in financial conditions would work in the same direction as rate tightening. In principle, as a matter of fact, you can think of it as being the equivalent of a rate hike, or perhaps more than that. Of course, it's not possible to make that assessment today with any precision whatsoever. So our decision was to move ahead with a 25 basis point hike and to change our guidance, as I mentioned, from ongoing hikes to some additional hikes, maybe some policy firming may be appropriate. So going forward, as I mentioned, in assessing the need for further hikes, we'll be focused as always on the incoming data and the evolving outlook, and in particular on our assessment of the actual and expected effects of credit tightening.
Mr. Chairman, can you explain the difference between ongoing rate increases and firming? Does firming imply a rate increase per se, or could policy firm without you increasing rates?
No, I think it's meant to refer to our policy rate. Really, I would focus on the words may and some, as opposed to ongoing. So we clearly were, what we were doing there was taking on board trying to reflect the uncertainty about what will happen. I mean, it's possible that this will turn out to have very modest effects. These events will turn out to be very, very modest effects on the economy, in which case, and inflation will continue to be strong, in which case, the path will might look different. It's also possible that this potential tightening will contribute significant tightening in credit conditions over time. And in principle, if that means that monetary policy may have less work to do. We simply don't know.
Do you have concerns that the hike you did today could further exacerbate the problem in the banks?
No, I mean, with our monetary policy, we're really focused on macroeconomic outcomes. In particular, we're focused on this potential credit tightening and what can that produce in the way of tighter credit conditions. I think when we think about the situation in the banks, we're focused on our financial stability tools, in particular, our lending facilities, the discount window, and also the new facility.
Nick Timmeros of the Wall Street Journal. Chair Powell, in your testimony 2 weeks ago, you had indicated you thought the terminal rate would be higher. Obviously, that was before the stress in the banking sector. And I realize there's a lot of uncertainty, but can you explain at all to what extent your forecasts or those of your colleagues or those of the board staff incorporated today a material tightening of credit availability because of the stress in the banking sector, or are you waiting to see it in the data before you incorporate that potential tightening into your forecasts?
So, we've just come from an FOMC meeting, and the people who write the minutes will be very carefully counting, but I'll tell you what I heard. What I heard was significant number of people saying that they anticipated there would be some tightening of credit conditions, and that would really have the same effects as our policies do, and that therefore they were including that in their assessment, and that if that did turn out not to be the case, that in principle you'd need more rate hikes. So some people did reflect that in their SEP forecasts. I think there may also just have been, remember, this is 12 days ago. We're trying to assess something that just is so recent, and it's people, it's very difficult. There's so much uncertainty. So December was a good place to start, and we wound up with very similar outcomes for December. And in a way, the data in the first part, the first 5 weeks of the intermediate period, pointed to stronger inflation and stronger labor markets. So that pointed to higher rates. And then this latter part, kind of the possibility of credit conditions tightening really offset that effectively.
To follow up, have you considered at all whether your primary tool, the funds rate, is going to be enough to sustain the kind of tighter financial conditions that you believe will be necessary without doing significant damage to the banking sector? Have you, for example, considered changing reserve requirements, selling assets out of the system, open market account, as a way to better achieve tighter financial conditions that don't accelerate deposit erosion, for example, from banks?
We know that we have other tools in effect, but no, we think our monetary policy tool works, and we think, many banks, our rate hikes were well telegraphed to the market, and many banks have managed to handle them.
Victoria. Hi, Victoria Guida with Politico. I wanted to ask, you, along with the FDIC and the Treasury, the Fed board decided to invoke the systemic risk exception to allow uninsured depositors to be protected at these two banks. And I was just wondering if you could speak to why that decision was made. Was it purely a confidence issue, or was there a concern that there would be some sort of economic contagion or financial contagion from the failure of these banks?
The issue was really not about those specific banks, but about the risk of a contagion to other banks and to the financial markets more broadly. That was the issue.
Okay, and then can you also, just to follow up, can you speak to the role that you will be playing in the Fed's internal investigation on its supervision and regulation? So
Vice Chair Barr is of course leading that review, and he's responsible for it in his capacity as Vice Chair for Supervision. I realized, right away that there was going to be a need for a review. I mean, the question we were all asking ourselves over that first weekend was, how did this happen? And so what we did was early Monday morning, we sat down and said, let's do this. And he was obviously going to lead it in his capacity. So I don't, my role was to announce it, and I get briefed on it, but I'm not involved in the work of it.
Chair Powell, Howard Schneider from Reuters. So I want to go back to your February press conference. You mentioned the word disinflation, I believe, 9 or 10 times, a process that you felt was, I forget the word you used, but gratefully underway or something like that. Is disinflation still occurring in the U.S. today?
Yes. I mean, what actually happened, Howard, was I got the question 12 times. So maybe it's a feature, not a bug. But yeah, absolutely, absolutely the same. The story is intact. So it's really three parts, right? Goods inflation has been coming down now for 6 months. It's proceeding more slowly than we would have liked, but it's certainly proceeding. Housing services is really a matter of time passing. We continue to see the new leases being signed at much lower levels of inflation. So that's 44% of the core PCE index, where you've got a story that's ongoing. Where we didn't have in February, and we still don't have now, is a sign of progress in the non-housing services sector. And that is, that's just something that will have to come through softening demand and perhaps some softening in labor market conditions. We don't see that yet. And that's of course, 56% of the index. So the story is pretty much the same. I will say that the inflation data that we got, to your point, really pointed to stronger inflation.
If I could follow up on that, I was curious why you don't see more coming from the credit crunch, because it seems to me that's something that you'd actually welcome to a degree and expect. And are you not seeing more coming from that because you don't know, or because you just don't want to have another round of wishful thinking?
So it's really just a question of not knowing at this point. There's a great deal of literature on the connection between tighter credit conditions, economic activity, hiring, and inflation. Very large body of literature. The question is, how significant will this credit tightening be, and how sustained will it be? That's the issue. And we don't really see it yet. It's so people are making estimates, people are publishing estimates, and it's very kind of rule of thumb guesswork almost at this point. But we think it's potentially quite real. And that argues for, being alert as we go forward, as we think about further rate hikes. For us, we'll be paying attention to the actual and expected effects from that.
Gina. Hi, Chair Powell. Gina Smilik from the New York Times. Thank you for taking our questions. I wonder if you could talk a little bit, I know that you've got your internal review coming, but I wonder if you could talk a little bit about what you think happened with oversight at Silicon Valley Bank and whether this suggests that something about regulation and supervision needs to actually change going forward. And I wonder, how can the American people have confidence that there aren't other weaknesses out there in the banking system, given that this one got missed, as you noted?
So let me say what I think happened, and then I'll come to the questions around supervision. So at a basic level, Silicon Valley Bank management failed badly. They grew the bank very quickly. They exposed the bank to significant liquidity risk and interest rate risk, didn't hedge that risk. We now know that supervisors saw these risks and intervened. We know that the public saw all this. We know that SVB experienced an unprecedentedly rapid and massive bank run. So this is a very large group of connected depositors, concentrated group of connected depositors, and a very, very fast run, faster than the historical record would suggest. So for us, so for our part, we're doing a review of supervision and regulation. My only interest is that we identify what went wrong here. How did this happen is the question. What went wrong? Try to find that. We will find that. And then make an assessment of what are the right policies to put in place so that it doesn't happen again, and then implement those policies. It would be inappropriate for me at this stage to offer my views on what the answers might be. I simply can't do that. Vice Chair Barr is leading this, and I think he's testifying next week. So, but that will be up to him. So that's really where it is. The review is going to be thorough and transparent. It is clear to your last question. It's clear that we do need to strengthen supervision and regulation, and I assume that there will be recommendations coming out of the report, and I plan on supporting them and supporting their implementation.
Sorry, and the final point, can we feel confident that these weaknesses don't exist elsewhere, given that they got missed at this bank?
These are not weaknesses that are at all broadly through the banking system. This was a bank that was an outlier in terms of both its percentage of uninsured deposits and in terms of its holdings of duration risk. And again, supervisors did get in there, and they were, as obviously, they were on this issue, but nonetheless, this still happened. And so that's really the nature of the review, is to discover that.
Michael McKee from Bloomberg Radio and Television. You've been very consistent in saying that the Fed would be raising interest rates and then holding them there for quite some time. Following today's decision, the markets have now priced in one more increase in May, and then every meeting the rest of this year, they're pricing in rate cuts. Are they getting this totally wrong from the Fed, or is there something different about the way you're looking at it, given that you're now thinking that moves might be appropriate as opposed to ongoing?
So we published an SEP today, as you will have seen, and it shows that basically participants expect relatively slow growth, a gradual rebalancing of supply and demand in the labor market, with inflation moving down gradually. In that most likely case, if that happens, participants don't see rate cuts this year. They just don't. I would just say, as always, the path of the economy is uncertain, and policy is going to reflect what actually happens rather than what we write down in the SEP. But that's not our baseline expectation.
Well, if I could follow up and ask, as you look forward into the rest of the year here, are you saying that what you see and the 5.1% basically consensus is based on it will be sufficiently restrictive, or is it leavened by the idea of you don't know what's going to happen? In other words, what should people think about in terms of how the Fed thinks about how far it is from the terminal?
It's going to depend. Remember, we're looking, for purposes of our monetary policy tool, we're looking at what's happening among the banks and asking, is there going to be some tightening in credit conditions? And then we're thinking about that as effectively doing the same thing that rate hikes do. So in a way, that substitutes for rate hikes. So the key is we have to have policies got to be tight enough to bring inflation down to 2% over time. It doesn't all have to come from rate hikes. It can come from tighter credit conditions. So that we're looking at, and it's highly uncertain how long the situation will be sustained or how significant any of those effects would be. So we're just going to have to watch. In the meantime, and obviously at the end of the day, we will do enough to bring inflation down to 2%. No one should doubt that.
Go to Rachel Siegel.
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thank you for taking our questions. I know we've talked a bit about how Silicon Valley Bank was unique to a certain sector of the economy, but there's also growing concern that there are financial stability risks from the commercial real estate market and loans that will begin to roll over later this year and next, and that smaller regional banks also disproportionately hold those loans. Is there a risk that could mimic the kind of what we saw with SVB to banks that disproportionately are focused in commercial real estate?
So, we've well aware of the concentrations people have in commercial real estate. I really don't think it's comparable to this. The banking system is strong. It is sound. It is resilient. It's well capitalized, and I really don't see that as at all analogous to this.
Another question: would you be open to an independent investigation separate from the Fed's probe?
I welcome. It's 100% certainty that there will be independent investigations and outside investigations and all that. So we welcome, when a bank fails, their investigations, and of course, we welcome that.
Edward.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. Inflation has been rather sticky. So do you need help from the fiscal side to get inflation down faster?
We don't assume that. We don't give advice to the fiscal authorities, and we assume that we take fiscal policy as it comes to our front door, stick it in our model along with a million other things, and we have responsibility for price stability. The Federal Reserve has responsibility for that, and nothing is going to change that. So we will get inflation down to 2% in time.
And if I could follow on that, but they're working, the spending that's happened is working against what you are doing, right? So it's prolonging inflation?
If you have to look at the impulse from spending, because spending was, of course, tremendously high during the pandemic. And then as the pandemic programs rolled off, spending actually came down. So the sort of fiscal impulse is actually not what's driving inflation right now. It was at the beginning, perhaps part of what was driving inflation, but that's not really the story now.
Let's go to Neil Irwin.
Hi, Chair Powell. Neil Irwin with Axios. Two questions about aspects of the government's response on Silicon Valley Bank 2 weekends ago. First, why is this new bank funding facility done under emergency 13.3 authority as opposed to expansion of the discount window, changing the terms of the discount window that's been around a long time? And second, can you discuss the Fed's role in the FDIC guarantee of uninsured depositors and why there's $143 billion on your balance sheet last week supporting that deposit guarantee?
Sure. So 13.3 seemed like the right, we have a little more flexibility under section 13.3. We've done quite a lot under the discount window as well. We needed to do a special facility that was designed a certain way, so we did it under 13.3. Really no magic to that. It's only available in unusual and exigent circumstances, and it has to meet certain requirements, but it seemed to be the right place. So with the FDIC, we're lending to the, in effect, we're lending to the bridge bank. So that's where the funds came from, and it's a loan that's 100% guaranteed by the FDIC, so there's no risk in it for us.
Chris Rugaber.
Thank you, Chris Rugaber at Associated Press. The SEP suggests one more rate hike, as does the change in the language in the statement, and which suggests that you're perhaps nearing the end of a cycle of rate hikes. Do you feel, though, that if inflation remains high, you'll be able to resume additional hikes as needed, or have you somewhat tied your hands here with these signals about rate hikes coming to an end? Thank you.
Absolutely not. No, if we need to raise rates higher, we will. I think for now, though, as I've mentioned, we see the likelihood of credit tightening. We know that that can have an effect on the macroeconomy, on demand, on labor market, on inflation. And we're going to be watching to see what that is. And we'll also be watching it, what's happening with inflation and in the labor market. So we'll be watching all those things. And of course, we will eventually get to tight enough policy to bring inflation down to 2%. We'll find ourselves at that place.
Hi, Chair Powell. Thanks for taking the question. Kyle Campbell with American Banker. I have a couple questions about the balance sheet. First of all, I'm curious at what point the financial supports that the Fed is extending through the discount window and through its enhanced lending facility might be at odds with the objective of reducing the balance sheet. And I'm also curious what your thoughts are on not just the availability of reserves, but the distribution of them throughout the banking system, and at what point you might be concerned about it being scarce for certain banks.
So people think of QE and QT in different ways. So let me be clear about how I'm thinking about these recent developments. So the recent liquidity provision that has increased the size of our balance sheet, but the intent and the effects of it are very different from when we expand our balance sheet through purchases of longer term securities. Large-scale purchases of long-term securities are really meant to alter the stance of policy by pushing up the price and down the rates, longer-term rates, which supports demand through channels we understand fairly well. The balance sheet expansion is really temporary lending to banks to meet those special liquidity demands created by the recent tensions. It's not intended to directly alter the stance of monetary policy. We do believe that it's working. It's having its intended effect of bolstering confidence in the banking system and thereby forestalling what might otherwise have been an abrupt and outsized tightening in financial conditions. So that's working. In terms of the distribution of reserves, we don't see ourselves as running into reserve shortages. We think that our program of allowing our balance sheet to run off predictably and passively is working. And of course, we're always prepared to change that if that changes, but we don't see any evidence that that's changed.
Hi, Chair. Katerina Saraiva with Bloomberg News. The minutes of the January-February meeting, the last meeting, indicate that you discussed the possibility of runs on non-bank financial institutions and the impact of large unrealized losses on bank portfolios. Can you talk a little bit more about that discussion, kind of what was talked about in light of that? And then why didn't the Fed, do anything about that at that point to ultimately prevent, what happened this month?
I mean, to be honest, I don't recall the specifics of that. It's quite an interesting 7 weeks, but I will tell you though that there have been presentations about interest rate risk. I mean, it's been in all the newspapers. It's not a surprise that there are institutions that have had unhedged long positions in long duration securities that have lost value as longer term rates have gone up due to our rate increases. So that's not a surprise. I think, as you know, as it is now on the public record, the supervisory team was apparently very much engaged with the bank repeatedly and was escalating, but nonetheless, what happened. And so that's really the purpose of one way to think about the review that Vice Chair Barr is conducting, is try to understand how that happened and try to understand how we can do better and what policies we need to change. I mean, one thing is the speed of I'll come back to that, the speed of the run. It's very different from what we've seen in the past, and it does kind of suggest that there's a need for possible regulatory and supervisory changes, just because supervision and regulation need to keep up with what's happening in the world.
Can you confirm whether or not the board knew about these escalations by the examiners in San Francisco?
I will have to come back to you on that. Yeah, I don't know.
Simon Urbanovich with The Economist. Thank you very much. Chair Powell, you stated twice today that all depositors' savings in the banking system are safe. Are you saying that de facto deposit insurance covers all savings? Shouldn't Congress have a say in that? And just by way of example, if a bank with less than $1 billion in assets failed, are you promising to bail out all of its depositors?
Well, I'm not saying anything more than I'm saying. So, but what I'm saying is you've seen that we have the tools to protect depositors when there's a threat of serious harm to the economy or to the financial system, and we're prepared to use those tools. And I think depositors should assume that their deposits are safe.
Go to Greg Robb.
Thank you, Chair Powell. Greg Robb from MarketWatch. I was wondering if you could give us a little bit more color. You gave just a little bit of color. You said during the first week of the Silicon Valley weekend, you said the question you guys asked was, how did this happen when you saw Silicon Valley Bank? So I was wondering if you could go to the Credit Suisse merger. I mean, wasn't that the big gorilla in the room? Didn't you breathe a sigh of relief when that merger happened? Thanks.
Sure. So, that was really the Swiss government. We, of course, were following it over the course of the weekend, and we were engaged with their authorities in the way that you would expect, all the ways that you would expect. It seems to have been a positive outcome in the sense that the transaction was agreed to, and it has been, the markets have accepted it, and it seems to have gone well. And I think there was a concern that it might not go well. So coming into the middle of this week, yes, I would say that has gone well so far.
Nicole.
Hi, thank you, Chair Powell. Nicole Goodkind with CNN Business. In the summary of economic projections, the FOMC sees the unemployment rate increasing to 4.5% this year. I'm wondering how you anticipate preventing this from snowballing while using the admittedly blunt tools at your disposal.
So that's an estimate of what will happen as demand slows and as conditions soften in the labor market. And it's a highly uncertain estimate. And we have to bring inflation down to 2%. The costs of bringing it down, there are real costs to bring it down to 2%, but the costs of failing are much higher. And if you read your history, I'm sure you have, you can see that if the central bank doesn't get inflation back in place, make sure that inflation expectations remain anchored, you can have a long series of years where inflation is high and volatile, and it's hard to invest capital. It's hard for an economy to perform well, and we're looking to avoid that, and to get back to where we need to be, back to where we were for a quarter century, and get there as quickly as we can.
I think the question is, historically, it's hard to.
Use the mic, please.
That's it.
Historically, it's been hard to contain unemployment, and the question is, do you worry about some sort of snowball effect, and how do you factor that into your projections and your thoughts?
Well, it depends on whether so recessions tend to be nonlinear, and so they're very hard to model. The models all work in a kind of linear way. If you have more of this, you get more of that. But when a recession happens, the reactions tend to be nonlinear, and that's so we don't know whether that'll happen this time. We don't know. If so, we don't know how significant it will be. And so, we're very focused on getting inflation down, and because we know in the longer run that is the thing that will most benefit the people we serve. That's how we can have we've had very strong labor markets through these long expansions that we've had. 4 of the 5 longest, or 3 of the 4 longest expansions in U.S. history have been really since the high inflation period. And the reason was inflation wasn't forcing the central bank to come in and stop an incipient or an expansion. You can have very, very long expansions without high inflation. And we had several of those, and they're very good for people. You see late in an expansion, you see low unemployment, you see the benefits of wages going to people at the lower end of the wage spectrum. It's just a place that we should try to get back to.
Jean.
Hi, Chair Powell. Jean Young with Market News. I just wanted to ask, with all the events of the past 2 weeks, do you still see a possibility of a soft landing for the U.S. economy?
No, he already said no.
It's too early to say really whether these events have had much of an effect. It's hard for me to see how they would have helped the possibility, but I guess I would just say it's too early to say whether there really have been changes in that. The question will be how long this period is sustained. The longer it's sustained, then the greater will be the likely declines in or tightening in credit standards, credit availability. So we'll just have to see. I do still think, though, that there's a pathway to that. I think that pathway still exists, and we're certainly trying to find it.
Hi, Chair Powell, Nancy Marshall-Genzer with Marketplace. Just wondering how many financial institutions have been issued matters requiring attention or matters requiring immediate attention citations at this point?
How many? I don't know. But those are serious regulatory, particularly immediate attention. That's and I guess there were 6 of them. So
and getting to the seriousness of it, how are you going to ensure that banks comply with these citations, take them seriously? How will you enforce them?
That is a great question and is right in the heart of what the review will be doing under Vice Chair Barr's leadership. So I think that's what you think about. What can we do to make sure that? But again, that's not for me to answer today.
Do you have specific thoughts on that?
Well, I see. If I did, I wouldn't share them because I really, this review is going on. And, I want nothing other than us to find out what happened and why, figure out what we can do to do better, and then implement those changes. That's all I want. It's for me to be giving you my half-formed or partially informed thoughts. It just isn't appropriate. There's a real serious review going on with people from all over the Federal Reserve System who are not connected to this, to this work, not connected to this bank. And under again, Vice Chair Barr's leadership, and I'm confident that it will produce a satisfactory result.
Okay, we'll go to Jennifer for the last question.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. Curious, how do you view financial conditions right now? If credit becomes expensive enough, choking off growth, as you said you're watching for, would that situation warrant a rate cut? What situation would warrant a rate cut? And have the bank failures prompted any discussion around changing the implementation of the balance sheet runoff? Thank you.
So we haven't really talked about changing the balance sheet implementation. That's not something we've discussed yet. As I mentioned, we're always willing to change that if we conclude that it's appropriate, but we're really not seeing any signs there. Sorry, then the question before that was, just give me a...
Curious how you view financial conditions now, and if credit were
okay.
to tighten enough, if that would prompt a rate cut.
So financial conditions seem to have tightened, and probably by more than the traditional indexes say, because the traditional indexes are focused a lot on rates and equities, and they don't necessarily capture lending conditions. So we think that, though. So there are other measures which if they're focused on, bank lending conditions and things like that, they show some more tightening. The question for us, though, is how significant will that be, and how, what will be the extent of it, and what will be the duration of it? And then, once you know that, there's a fair amount of research about how that with broad uncertainty bands, how that works its way into the economy over what period of time. And so, so we'll be looking to see the first part of that, like how serious is this, and how does it look like it's going to be sustained? And if it is, it could easily have a significant macroeconomic effect, and we would factor that into our policy decisions. I mentioned with rate cuts, rate cuts are not in our base case, so that's all I have to say. So, thank you very much.
Hold on. Hold your horses. Hold your horses. Let's see. All right, team. Powell kind of, he basically, what I got from that is he was kind of saying that there's not going to be a soft landing. He gave us a little bit of insight into the bank stuff. I'll look at the transcript a little bit later. But team, we went a little bit longer today than we expected to. Again, I just threw that link in the live chat for you guys. Everybody gets over 90% off their first month to the platform. For those of you guys that are already members, remember, if you want to be in for that stream later today, Gabe's morning stream tomorrow, you get that thigh gap indicator. Make sure you guys reach out to Diana before the end of the day, and she will help you upgrade to 3-year. But team, that's going to wrap it up for today. We'll see you guys later. Peace.